Bitcoin over 20k, Ethereum over 1.5k. Are we back in a bull market? This is the video where I will answer that question. Basically, the short answer is no, but there is some optimism along the way. And I wanted to analyze some of the reasons why Bitcoin went up and why Ethereum went up. The crucial thing is you have to look at the chart. So both Bitcoin and Ethereum have this kind of gap here. As you can see, basically here we are back from the top. Here the same will happen with Ethereum. If you look at it at the graph, I can also draw pretty much the same straight line here. What happened here is actually FTX here totally exploded. That was beginning of November, and that's why we had this massive dump and then a little bit of more dump at the very end of the year. So there were two pressures for selling both Bitcoin and Ethereum, as well as other coins as well. And those were related to, first of all, FTX imploded, so people were scared. Also, a lot of capital was lost, and basically people were scared that liquidators for FTX will also try to dump the assets to give back to the debtors. On the other hand, end of the year is the year where people try to tax harvest, take their losses and move on. And this is what also might happen at the very end. Now, those kind of reasons went away at the beginning of January. And this is when we started to see a little bit of uptick here, both in Bitcoin and Ethereum. You could see this slow uptick. And then on January 12th, as you can see here, I can go and zoom in. On January 12th, we had the CPI report. CPI report is the consumer price index from the US, one of the major indexes when it comes to how the overall US economy is doing. And if US economy is doing fine, then basically we're all fine. This is a little bit correlated. And those CPI reports were showing mild inflation at around 6%, which is a good sign in general. So people were excited about that. This turned out to be a good starting point. And this is also one of the major reasons, because also if you try to look at other markets, so for example, if you go and look at gold, then you pretty much see the same story. Looking at the November, we don't see, of course, this dump because FTX not really influenced much of the gold market. But again, you can see the small uptick at the very end of the year and beginning into January. So basically, January 12th, we are seeing the uptick again because of the CPI index, and it's slowly growing. So if there was no FTX dump, I guess, then probably would stay at the very same levels. Generally speaking, the market is very choppy. Still, this is a mild optimism. We're definitely not in the bull market fully. So if you feel any kind of FOMO, you don't have to. There will be many other pumps and dumps here on the line. And also just be careful, because if you probably don't want to invest everything right now. Of course, this is not a financial advice. You should do your own research. And the whole video is only for educational purposes. However, be careful, because we will see ups and downs for sure. Far from over is the bear market. And the reason for that is that economy is still not in a good shape. We still have major issues with supply chains. The inflation is still here, it's not beaten. However, there is optimism on the line. This is crucial also because we need to beat inflation in order to really have access to cheap money. Most of the bull market, the previous bull market in 2021, was driven by access to the cheap money. So once you can borrow a lot, you can also invest a lot, be on leverage. This in turn actually caused the future fall of the bull market and the fall of crypto, but also other assets. But people tend to invest a lot when they have access to cheap money and the capital is running around. Right now, access to capital is much harder, both for general investors, for VCs. So generally speaking, people are also more careful when it comes to investing. So you won't see super fast upticks and you should be fine with that because it means that you can slowly invest. Probably the best investing strategy I would recommend is DCA in, DCA out, which means you dollar cost average in the position and out of the position. So this would mean that in this case you buy, for example, each day or maybe each week, depending on like what's the average regularity you want to have, and this way you can cut a bit of the uptick here. This is really a great strategy, I guess, because especially in the choppy markets like that, when the things are going up and down, this is probably the best way to average your position and be good in the long run. Because in the end, what really matters, I think, is that Bitcoin, Ethereum, most of the major cryptos are here to stay for many years ahead, and you should plan accordingly. So you should not feel FOMO for the small upticks here. Remember, we were at the level of 70k with 4k Ethereum, so we still have a really long way to go, and it's still a long time before we will reach those heights. Of course, when you look at smaller coins, there's a much more volatility there. So if you're more on the side that you want to do 2x, 3x, it's definitely possible. Not with Bitcoin, not with Ethereum, but for example, if you were to look at Aptos recently, it went from $3 to $8 and almost $9, which means that you could do 2 to 3x on Aptos alone just in January. So those kind of opportunities are here definitely even in the bear market, but you have to be super careful. It's really hard to find those and nail them. And it might be hard to actually be in a position to enter and exit with a good timing. So this is super hard to do it. And unless you are a pro trader, I would recommend just going slowly into the position and maybe exiting once you, for example, make 2x with half of the position. So you are in a plus and then you stay with the rest. Remember, always do your research. There are many things happening in the bear market as well. This bear market is definitely so much different than the previous ones where people were in total depression and nothing happened. We still have a lot of L2s launching, a lot of new projects, DeFi on different chains, from those new L1s like Aptos, Sui, to older chains like Polkadot, Solana, Ethereum. Everything is really, there's a lot of energy in a space, so it's really cool. And the best way is to wait when you're certain about your opportunity, when you know the team, when you know what's happening, when you can explain it well, then that's the best moment to enter. Never enter with emotions just because something went up 2x and you're thinking that it will go 4x and make money on the way. This is the best way to be the exit liquidity for someone else, and you don't want to do that. The best way is to just stay humble, stay calm, analyze the markets, and then when you feel ready, when you feel like entering the position, that might be a good moment to start. So this is it. Everything I showed you here is on OKX. You can use the link I use. This way we will have a win-win scenario. When I get a bonus, you get a bonus with my referral link. The trading view, of course, is also a great tool if you're looking to analyze the markets as well. Generally speaking, I totally recommend going on Twitter, trying to read what are the sentiments on the market. A lot of traders are analyzing what might happen with very mixed views. Of course, some of them, of course, are super optimistic. Some are a little bit more pessimistic. I'm probably in the middle. I'm neutral. I just acknowledge that I don't know what happened, but whatever will happen, I want to stay focused and prepared for the positions that will open, because the great thing about the crypto market is that you will always have another chance, unless, of course, you don't survive. So survival in the crypto is the best strategy actually. So never take more risk that you can handle, never take risks so you will be entirely out of the market. always have some small position. Of course, it might be totally in stable coins, that's totally fine, but if you go to zero, it's much harder to go back. You need to have something in order to play in the market and do some kind of moves, be ready for the opportunity. It's better to wait 6 months, do nothing, and then have a big win than be in a choppy market, win little by little, and then lose everything. Because this is the most common scenario in a bear market. People are super optimistic about the small upticks, and then when everything falls down, because for example, we still can go back to the levels of ETH being, for example, at $900 or $1,000, or Bitcoin being back to 15,000. People are over leveraged and this will cause them to fall. You don't want that. You want to be especially either totally in a spot and then you don't have to worry about that, and ideally also dollar cost averaging your position so that you're in the calm and you're really just here for the whole ride and especially looking for the long term. This is it for morning of 16th January. Thank you for watching. Subscribe to the channel. I tend to do a lot of crypto reviews, updates, so you don't want to miss that. See you in the next video.